our demand is about 1.1 billion ounces. So there's a shortfall here that is coming to the table, that is presenting itself in front of us. So not only just a precious metal, but it is an industrial metal now. It's so required because of its conductivity for use in every application you're going to see: solar, AI, cars. We've been in a deficit for 5 years. We can't continue that. It won't sustain. The stockpiles in the world are shrinking. The mines aren't coming on. There's not a whole bunch. You're not seeing, hey, there's 5 to 10 new silver mines coming on. That's not true. 70% of the silver produced in the world is a byproduct. So it's from a copper mine, a zinc mine, or gold, or other things. There are not a lot of miners on the planet that are just silver miners like we are. They're far and rare. So the excitement for us is silver is just starting here. Mines aren't coming online fast enough. And you talked about the Pierre Lassonde curve. Think about a new discovery, Cali. You get a new discovery in area. How long does that take before that mine's actually in operation? Depending on where you are in the world, it could take 10, 15 years. So we need it now. Antimony, silver, and copper, and we produce all three of them.
What's the bigger picture when you look at America's gold and silver? Where's the end line that you want to achieve?
Look, there's no doubt that it's going to be an exciting end game. And I can't tell you if the end game is 5, 20, 30 years. There's going to be ore here for 50 years. Where's the company going in the next 3 to 5 years? I think it's really important that people pay attention to some of the PEAs we're doing. We're doing some technical studies right now outside of our company with contractors and consultants to look at the much bigger scope, because it's the first time somebody owns Core Mine, Galena Mine, Caladay Shaft. All those shafts are in a row. We own all of those. And now we own Crescent on top of that. Nobody's ever owned that at one, ever consolidated together. The synergies are massive.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only.
Paul, it's great to have you on the show. I assume a lot of our following already knows who you are, but let's just do a quick overview of your background and some of your past successes in mining before we get into the story about America's gold and silver.
Great, Cali. Thanks for having me. It's an honor to be here on your show today with you. Excited to give people a bit of an update on the company, a bit about my past. I've been mining now for just under 40 years. I believe it's my 39th year this year. Unfortunately, at the age of 18, I was one of those Canadians who was a bad hockey player. So I went into a mine at 18 years old. So I had a choice. I couldn't go to college. So go into the mine or the lumber industry. And I chose going into the mine. It obviously was the greatest decision of my life, but it allowed me to be a different CEO. I worked with a lot of other CEOs. We all have different backgrounds. That's what makes each and every one of us unique. In my case, I didn't start my career in a boardroom or in an area that you're just doing engineering right out of the gate. But what I did do is I mined for about 13 years. So I was drilling and blasting underground Cali, a number of mines in Canada, but it was always usually for the same company. I was working for Redpath or Ram Raising. When I was 29 years old, I got tapped on the shoulder, recognized as a next generation leader. I had an opportunity to go to Hailbury School of Mines, which I did for 3.5 years, graduated, and then I came to the US. So I finally did get an opportunity to go to college, but I was a lot older and I was a mature student, and I had all that mining background that helped me tremendously. Knowing how to drill and blast, knowing how the terminology, a lot of people don't even understand the terminology of backfill, CRF, or all these things that we're used to on stoping. So it's been an exciting 39 years. I'm very proud to serve now today as chairman and CEO of America's Gold and Silver.
So since you've been at America's Gold and Silver, a lot of catalysts, a lot of house cleaning from when you've been there just over a year, if I'm correct. Talk to us about why you liked Galena, why you did so much house cleaning, what you saw as the opportunity.
Yeah, Galena is in a district. We're talking one of the best silver districts on the planet. The Idaho Valley, that Silver Valley, is so well known with all the silver mines. It's produced It's over 1.2 billion ounces of silver. And these are predominantly silver mines here, which is very unique. A lot of the silver in the world is a byproduct. In our case, our mines, the core mine, our Galena mine, our Crescent mine, they're all predominantly silver as the primary metal. What did I like? Well, before I joined here, I was an advisor for Eric Sprott at this asset. Eric owned 40% of the Galena mine, Cali. And I had gone to the mine a number of times, and I was still chairman and CEO of Karora. So I was able to look at the mine, understand some of the issues that it had. Look, one of the biggest issues it had, it was starved for cash. There was just no money deployed to Galena. And that's because the company was directing their dollars and efforts at a gold mine we had in Nevada. It's Relief Canyon. That's really what created the opportunity for me to come, because Galena had no cash. It wasn't able to buy equipment. So all the things that we're fixing here, we're doing some drilling. Our mine had never had any drilling in 10 years. Doing some maintenance on the infrastructure. We have a shaft that's 80 years old that needed to be updated with newer equipment, new infrastructure, new instrumentation. So those things are done now. So the things that we saw, myself and the rest of the team, were very obvious, and they were things that we could fix. And we have done that in the past. We did it at both Klondike and Karora. So when I look at the list, and I'll probably talk a bit about them afterwards, there was a list of about 5 critical things. And in order for us to be successful, we needed to get money first and foremost. We brought in a strong executive team. We have very strong mine operators now. And we're excited about our growth. Galena has produced 5 million ounces at one point in time, only 1 year, but we're going to get it back there, and we want to sustain that for a very, very long time and into the future.
Can you talk a little bit about the mining method? Have you changed that since you've come in as well, and then how that's going to affect ramping up production?
Callie, that's actually a really good question. Mining methods at any mine in the world matter tremendously. It allows us to move tons, get ounces. And in our case, everything was being done with handheld jacklegs. So when we got here, and even the stuff I looked at when I was Eric's advisor, I was quite surprised to see a mine in 2024 or 25 that was still using 100% jacklegs. And jacklegs are handheld drills where a miner is sitting there drilling 30 to 40 holes a shift, and he loads them with explosive, and then we blast them. What we're doing is we're modernizing the mine, and that's, you got to understand, this thing is over 80 years old. You don't just come in there, flip a switch, and you all of a sudden change the mining method. We're going to long hole, and year after year, this year will probably be about 15%. We're targeting more next year. Each year, our end game is to get this mine about 80% into long hole. That's where we need to get to. And our neighbors next door, they do it very well. They're in the same valley as us. They've been doing long hole for the last 4 or 5 years. And long hole is a method that is cheaper and safer. I'll give you a good example. We took out one stope, and a stope is a big segment of rock. We took out one stope, our first long hole stope, Cali. It took us around 28 days to drill and blast and muck out 7,000 tons, about 28 days from start to finish. We used long hole in that. So if we had done that conventionally, as the mine was doing it before, it would have taken us anywhere from 12 to 14 months. So we're mining these things much faster, safer, and it is less work. You don't require so many people on jacklegs. You got one driller on the long hole, then you bring in remote mucking equipment. And that was one of our big obstacles. We never had any remote equipment so that we could long hole. When you're long holing, you're exposing a piece of equipment under unsupported rock. So you never want a person to walk in there. You have a remote control, send in the scoop, and you take the ore up.
How much does that change as far as like for your price of drilling and getting the ore out? Like what are you saving there, or what's the potential to possibly save?
Yeah, look, that's a great question. We'll cut our mining costs about half. That's how big this is. So for us, our original mining costs will be cut in half as we continue to do more and more long hole. But more equally important is our ability to mine these areas quicker. now that we're drilling, we have discovered 7 to 8 new discoveries at Galena. We're discovering some at Crescent as well. So the mine's going to be here for a very, very long time. We have one of the biggest resource and reserve bases I've ever seen in my 39 years of mining, over 200 million ounces. We're not at 5 million ounces a year yet. If you take 200 million ounces divided by 5, you can go, geez, they're going to be here for a long time. And we continue to find things. So in our case, we need to accelerate those stopes. We need to say, all right, how does it cut costs? Well, it allows us to go into our stopes and maybe mine 3 stopes in a quarter in that same zone rather than 1 in a quarter. So the ability to access more fronts, more areas in the mine is optionality that we all desperately need when you're in any mine. The more optionality we have, the better we will do, the more successful we will get.
Can you talk a little bit about Crescent and the synergy of adding that on? And then I know, just share what's public information. As far as the exploration side, what I like is that I'm assuming you are funding that through your production. So we're kind of skipping the Lassonde curve there.
We kind of are. You're right. That's a very valid point. And honestly, it's the same playbook that we did at Klondex and Karora. I'll just talk about Karora real quickly. In the 6 to 7 years I was chairman and CEO, we spent about $100 million to $120 million per year. It was over $600 million in capital. That included waste development and exploration, as you're pointing out. Exploration is a very critical component to what we do. It allows us to find new areas. It allows us to expand the mine. We took that Karora operation from 800 tons a day to 5,000 tons a day. But more importantly, we generated about $600 million of revenue from the mine, paying for all the exploration, paying for all the waste development. We're doing the same thing here at our Cosalá operation. Crescent, we're not completely fully funded yet, but Galena is flat-lying as we're continuing to build up as well. And we're funding that exploration through our ore coming in. And as you point out, that's a little further up the Lassonde curve. And that's really important. It's a lot less dilution for our shareholders. And look, Cali, I've been mining 39 years. I have a wife, 8 kids. This is our largest position. We own about 85% of our net worth in one stock. This stock here alone. That's a lot of confidence and conviction on us believing in our own story. I'm without doubt the largest retail shareholder in the company. There's no doubt about it. So we're very excited about it, and generating cash flow to pay for exploration and other things is very important for us. And we're in a position where we can do that, as you're pointing out.
Can you talk to us about Cosalá as well? For Q2, that was kind of your lead production, correct?
Yeah, Cosalá, absolutely. It came to the table and did exactly what we're supposed to do. Last year in 2025 was our first year. And as you pointed out, we've been here a little over a year and a half now. 2025 was a record year for that operation. It's the best it had ever done in the history of the mine. 2026 is shaping up to be a better year than the record year we had in 2025. So it's quite exciting. We're very excited about the fact that Cosalá continues to deliver month after month. Now, in saying what you said, you're right that Cosalá had more ounces for that quarter. However, at Galena, we were down for a month, but it was a planned outage. We planned the shaft to be down for a full month so that we could repair infrastructure, add new technology, put in new braking systems. It allowed us to go from around 42 tons per hour of skipping up and down that shaft to doubling to over 85 tons per hour. So when I think about Cosalá and the importance of it in the company, 2025 record year, 2026, we're going to beat that record year. And I think about, well, how did it contribute in Q2 differently? Well, it had every month. We didn't go down for a month. And as a reminder, that Galena, when we went down, it was a planned outage to improve the infrastructure. And that infrastructure, the millions of dollars we're spending on that infrastructure, it's not for a quarter, it's not short term. This is for the next 30 to 40 years here where we're putting in infrastructure that will last for a long time. For us, it's about making sure we can sustain these numbers, Cali. We don't want them to be a flash in the pan where you go, oh, they had a great quarter. we're building momentum like we did at Klondex and Karora on companies that had misunderstood assets at both of those companies. They were very misunderstood and people didn't believe in them. We come in and put a different discipline, and we've been very fortunate and successful at doing that discipline.
I want to switch gears a little bit. Like one of the big differences in this bull market, especially for silver, now that it's a critical mineral, you also have that antimony aspect. That's not a tailwind that we saw 10 years ago. Can you talk to us a little bit about how that's really ramped up everything for you?
You know, that's a great question, and I hope you can see this. I'm going to show you something. I don't know if you can see that. Are you
Yep.
able to see it in your screen?
Yep.
So it's a bar, and that's our ticker there. That block screen. Anyhow, I'm holding a bar here in my hand. That bar is 99% antimony. And look, if you had asked me 18 months ago, what is antimony? I would have said, I don't know what antimony is, but I know this. I know that we produce it and we're going to continue producing it. And it is something that will surprise a lot of people. In fact, even when we did our own due diligence, we didn't include any revenue from antimony. However, we couldn't have got it more wrong. And that's easy to admit. The reality is antimony here is such a critical metal. It's required so much for anything military, anything you want, and fire retardant as well. People talk about bullets, missiles, anything, and we're in a war at the moment, so we need antimony. We're sucking up stockpiles. The other biggest use for antimony is a fire retardant. And when you look around the US, actually, you're in Vancouver, go down south directly from you and you'll be in California. Ask yourself, are the fires year after year getting better? Are they getting worse? There always seem to be bigger fires, larger volumes, and antimony is a critical component into fighting those fires. So we're quite proud to produce antimony. We are one of the only antimony producers at the moment in the US, and that matters. And we've got a good partner with US Antimony. We partnered up with them earlier this year so that we can build a new facility in Idaho, one that'll last for the next 50 years. So our intent with our JV partner is to produce antimony and scalp it off before we send our concentrate to anyone else. That's a big change in our process. At the moment, we're mining, call it 400 to 500 tons a day, Cali, up our shafts, and we're crushing, grinding that down. We produce a concentrate. That concentrate has lead, copper, silver, obviously, antimony, and very, very small amounts of gold. So our concentrate goes up to you in Vancouver. It goes to Tecaminco, straight up the road, Tecaminco. We're going to remove all the antimony so that we can produce these bars and sell them to the government or anyone else who needs them. In fact, we won't meet the government's needs. Even when all the other mining companies are producing all of us together, we'll be short on meeting the government's needs. The government needs 50 million pounds of antimony per year. And we need another 40 million for our allies. We'll get to around 6 to 8. So we're welcoming everyone. There are others that are coming in the future. We'll welcome them all because we certainly need it in the US. It is something we've relied on other countries for years, for decades. And unfortunately, we can no longer rely on other countries on giving us or selling us. We don't know if they'll cut us off. And we know that our countries that we've been buying it from that have just stop selling it to us, and that's unacceptable. We have to have something domestic that we're producing from the beginning right to the end product, and this is what we're doing with US Antimony NS.
For again, like the critical mineral side, and even with silver becoming a critical mineral, do you find like the support is just a lot different than again like 10, 15 years ago that like actually governments are getting behind this, like communities even as well, like we saw a lot of pushback even 10 years ago, and now that political landscape is turning the page for mining?
Cali, you're absolutely right. Look, it's impossible to look at silver and think back 10, 15 years ago when people were asked what's silver predominantly used for. People would have answered, it's a precious metal. It is a precious metal. There's no doubt about that. However, today it is so required. It's no longer just a precious metal. Before, people wanted silver bars, silver coins. They wanted it in their safe. They wanted to hedge against currencies, which a lot of people still do. Let's be honest. People are still doing that. So while it's still a predominant precious metals, the industries that it requires, like artificial intelligence, semiconductors, actually your cell phone, our cell phones, every cell phone in the world, there's probably 1.2 billion cell phones produced in a year. That's around 6 to 8 million ounces of silver. You think back, the AI centers are around 470 million ounces a year. We've been running a deficit. The world has been producing about 800 million ounces of silver with all the mines on the planet. Our demand is about 1.1 billion ounces. So there's a shortfall here that is coming to the table, that is presenting itself in front of us. So not only just a precious metal, but it is an industrial metal now. It's so required because of its conductivity for use in every application you're going to see: solar, AI, cars, cell phones. It's quite exciting to have silver up the rank there now. And we've been in a deficit for 5 years. We can't continue that. It won't sustain. The stockpiles in the world are shrinking. The mines aren't coming on. There's not a whole bunch. You're not seeing, hey, there's 5 to 10 new silver mines coming on. That's not true. 70% of the silver produced in the world is a byproduct. So it's from a copper mine, a zinc mine, or gold, or other things. There are not a lot of miners on the planet that are just silver miners like we are. They're far and rare. So the excitement for us is silver is just starting here. You have 5 years of a deficit. It's not sustainable. Our stockpiles are shrinking. Mines aren't coming online fast enough. And you talked about the Pierre Lassonde curve. Think about a new discovery, Cali. You get a new discovery in area. How long does that take before that mine's actually in operation? Depending on where you are in the world, it could take 10, 15 years. So we need it now. Antimony, silver, and copper. And we produce all three of them. We produce copper as well, which is very, very important. You see copper prices are, what are they, $5.70 a pound or something? They're also at peak levels as well. So having our mines in this specific point in time is very, very critical to us.
A lot of people, they talk about, oh, silver's not at 100 anymore, it's going down, but we all know that a lot of mines are quite profitable at these prices, whether that's 60, 70. Where do you guys start making profit? Like, what do you kind of factor in as the price for silver?
Yeah, look, you can look at our ASIC. It's probably around $35 to $40 an ounce at the moment. However, in Mexico, we just announced was $16.50 an ounce last quarter in Q2, our operating cash flows. As we continue to put the capital that we are required to the Galena complex, our rates actually drop. We don't go higher. Our margins improve. The more capital we spend on waste development, fixing the infrastructure, putting in a batch plant, for example, our mine doesn't have a proper paste fill plant. And just so people and listeners understand what that is, after we carve out a zone in the mine and we remove that zone completely, there's a void in the rock. We must fill that void. So we need a paste fill plant. And that paste fill plant is very critical that we're building in front of us. So all these things we're doing to sustain that silver production is very important for us to get to, again, that 5 million ounces and then sustain it from that point, Kelly.
Want to talk about one of the catalysts that you achieved this year? You wiped out 86 million off the balance sheet. That's pretty impressive. How'd you get that done, and where does that leave you now going forward?
Kelly, that's a great question. Look, we did two tranches. One with our largest shareholder, Eric Sprott. It just shows his commitment and conviction in the company, the people, and silver. Eric Sprott, we were able to do about 45 million. The other one was around 45 million as well. It was formerly Sandgold. It's Royal Gold now, a royalty company. So removing that in Q2 is massive for us. We were paying in interest about $4.5 million per quarter. Now, a company our size, it's not completely into full scale production yet. You're talking, $4.5 to $5 million of interest, not on the principal. Wiping that out in Q2 was instrumental. It allowed us to remove these shackles that we had on and really set the stage and the path for us to really continue to grow our operation. So we're very excited about cleaning up that balance sheet and removing those two pieces of debt. They were quite an overhang on us and on our stock, and they weren't cheap either. So them being gone helps us tremendously.
So we've talked a little bit about all the current catalysts. Like what's the bigger picture when you look at America's gold and silver? Like, do you want to become like the #1 silver producer for the US? Like where's the end line that you want to achieve?
Look, there's no doubt that it's going to be an exciting end game. And I can't tell you if the end game is 5, 20, 30 years. There's going to be ore here for 50 years. Where's the company going in the next 3 to 5 years? I think it's really important that people pay attention to some of the PEAs we're doing. We're doing some technical studies right now outside of our company with contractors and consultants to look at the much bigger scope, because it's the first time somebody owns Core Mine, Galena Mine, Cali Shaft. All those shafts are in a row. We own all of those. And now we own Crescent on top of that. Nobody's ever owned that at one point, ever consolidated together. The synergies are massive. So as far as I'm concerned, we are in the greatest location in the world. We've got some of the best team in the world. For us, it's about execution now, making sure we deliver. And again, I'm going to repeat this because it's worthy of mentioning. Galena has produced 5 million ounces per year. We've got our Mexican operations that are stepping up to the game here. So from our perspective, getting to a production rate that we can sustain. It's really important for us to not have these ups and downs. We want to make sure that what we're building is sustainable. We need to make sure that our profiles are sustainable and they'll last into the future. And I don't think we're done on the silver prices, Cali. But at these prices, we do very well. We do extremely well at over $50 an ounce. We're not unhappy at all. It's one time in my lifetime when I started thinking about all the things that we need this silver for. There is no doubt to me that $100 or more silver, 150, it's going to come. We're not that far away. And then the one thing that, our ticker is USAS, but that antimony, people will always underestimate us on our antimony. I guarantee it because I did it myself. Even during my own due diligence, I'm like, wow, antimony, what's it used for? How come we have it? It's in the tetrahedrite ore. So as we're mining it, we mine it no matter what. As we're mining a ton of silver, that antimony is there. So for us getting revenue from it, that's a big deal and a big change. So our future is one that's very exciting with tremendous exploration upside. We've got a lot of critical metals with gold, copper, silver, antimony. Which one am I missing? Don't remember. Lead. So all of them that we're producing are very important to the U.S. government, and we matter. We've got 350 miners in Idaho at Galena. Crescent's probably another 60. We'll maintain about that 400 people for the next 30, 40 years. So it's a very exciting story. If you believe in silver, well, you're coming to the right place without doubt. And silver's got a lot more legs beneath it, no doubt, Cali.
You mentioned 39 years of mining. What's the difference like this time? I mean, obviously we see, the energy race. There's a lot of different critical minerals, but what has you the most excited for this bull market compared to before?
Well, my 39 years of mining, I would say 37 out of 39 were all in gold. So I think I was very lucky, and I'll take luck every time of my life that I'm in silver when silver is at the peak prices it's ever had. In 1980, you had the Hunt brothers get silver up to $50 an ounce, but then there was some movements that prevented it from staying there. Those movements can't exist anymore because it's too much of an industrial metal now. It's very different than where we were in 1980. So silver prices up on the rise. From my perspective, my 39 years, it is without doubt the most exciting jurisdiction I've ever had the pleasure of working in and the honor of serving as chairman and CEO. So our revenue comes from our silver, which is very different than a lot of people. As I was saying earlier, a lot of people it is a byproduct. In our case, 90+% is coming from our silver revenue, which is very important. And our recoveries in the EC 120 in Mexico, we've been able to do some metallurgical testing that has changed the recoveries. We were seeing recoveries in 78 to 82%. We're seeing recoveries now above 90%. Those things matter. Those technical solutions, they matter for us. And we're expanding the mill in Mexico. So it's a very exciting platform and a journey to be on.
Paul, I won't keep you all day. How can our following or investors reach out to you guys? Who's the right person on your team to connect with?
Yeah, so you can go to our website and you'll see we have an investor place where people can send us an email or ask questions. And Miranda here, who's with us, she will respond to it. We are very responsive on it. But if you get a hold of Miranda, you will get a question into us and you won't regret making that phone call or sending us that email.